Top three things in my notebook this morning. Number one, the euro, specifically the euro versus the dollar. Number two, China. And number three, the VIX. So first on the euro's testing a trend breakdown here. It's an interesting signal that goes in kind with what's been happening to European equities. So don't forget that Draghi's go-to move here would be to get easier in as much as that's the Fed's move and the BOJ's move. So again, it's a currency war. Who can devalue the fastest? Again, a devaluation war would be another way to put it. So watch that trend line on euro versus USD. That's at $1.35, and you dipped below it this morning. Point number two is China, which is a bullish data point, not only on some June data stabilizing, but on the market read-through of that. So we had both the Shanghai comp and the Hang Seng bust out above what we call intermediate term trend resistance. So again, that's one day, but again, the move in the Hang Seng was sufficient. It was up a full 1.7%, and it asks us, in a world where we're getting more bullish on emerging markets, whether or not that would include China. We're not there yet. Finally, on volatility, front month volatility has had a huge move, obviously, off the 10 line. So again, if volatility goes to 10 today, please don't buy a growth stock, please. Again, if volatility goes to 14, you can buy a growth stock. Hopefully it was Chipotle, and hopefully you have millennial kids that are eating those too. But again, volatility, the risk range is 11.94 to 14.99. We're starting to get a migration of a breakout here, or a phase transition, moreover, in volatility. So watch out for that off the most asymmetric long-term line that there is in the VIX on the front month side, which is, of course, 10, which we've been writing about extensively. So those are your top three things.